Good afternoon, everyone, and welcome to our webinar on how to combine risk management and cyber insurance. So just for those of you who have not heard of Diligence, we offer a board management software tool that enables more efficient and effective governance. It's actually used by over 140,000 directors and executives worldwide, and here in Australia, we've got over 600 clients. These are ranging from, we've got 54 from the top 100 ASX, and we've also got a number of clients from government and not-for-profit. So now I'll just jump in and introduce our two guest speakers today. So we've got Monica Scheisinger. So Monica is recognized as a specialist cybersecurity governance expert who also has extensive board experience and knowledge. She started her career as an IT architect and systems integrator and managed large projects for a wide range of industries. Her knowledge in security dates back to over 20 years ago when she first installed Checkpoint firewall solutions. Welcome, Monica. We've also got Mina Wahi here, who is a specialist cyber insurance broker for cyber risk, data privacy, intellectual property risk, and cyber crime. She helps organizations identify potential cyber risks and match insurance to their requirements. Mina advocates that cyber insurance should be a key component of a company's enterprise risk management strategy, and she also holds an MBA from Monash University and speaks very regularly at conferences. Thank you and welcome, Mina. So look, we'll just kick in. I'll just give you an overview of what we're going to cover today. So we're going to cover three main areas, and these will include: where does cybersecurity sit in the enterprise risk system? How do you combine risk management and cyber insurance? And then we're going to look at some recent case studies that we've seen in the media, and Mina and Monica will dive a bit deeper into each of those. So we really want to make this more of a discussion today, and we would love if you've got any questions as well. There's a chat box on the right-hand side of your panel. So if you've got any questions, if you kind of send those in, we will address those throughout the webinar. And if we don't have time, we'll answer them at the end. And again, if we don't have time for those, then we will document the answers and send those out after the webinar. So let's get into it, and I'll kind of pose this question first of all to Monica. You know, we're talking about risk management should be part of the board charter. So Monica, where do you kind of see risk management or cybersecurity sitting in the enterprise risk system?
Natalie, thank you for inviting me into this webinar. I think the risk management is actually should sit on any board charter, and whether there is a small company or a larger company, perhaps you may consider having a risk management, finance, audit committee. For larger companies, sometimes they actually split the finance and audit and then risk management and security. So I think it is an important component. My approach to risk and the way that I actually advise clients is to manage risk in a pyramid style, whereby the board of directors needs to create the risk strategy, and that includes the risk appetite, and then the risk will be managed bottom up, in the sense that you manage risk from the staff level, then to the management, various levels of management, then CEO, and then push the highest risk, the extreme risks and the very high risks to the board. The risk should be managed in conjunction with the delegated authority and delegated financial authority. So you cannot have a staff member managing a risk that is worth, for example, 1 million. I usually like to put a figure to each risk. You can't do that always. So the extreme risks need to be managed at the board level. Cyber risk is one such risk. I mean, of course, you can actually, it's a category of risk and you can split it into various risks. But overall, the risk of having a company attacked, that needs to sit with the board, and the board has to own the mitigation and the strategy for that.
Okay. So what would you say, why is cyber risk so different from the other risks in the organization?
Even if you manage the cyber risk as part of the same system, and that is good, you know, for recording, for looking at historical data and seeing, you know, how risk has decreased or increased, or if the risks have disappeared. I think that you need to manage the cyber risk differently because of its effects. So companies can actually disappear off the face of the earth within 2 weeks. We had a few examples. Distributor.it was an ISP and also a domain reseller, and they got hacked, I believe, in 2011. And within the space of 2 weeks, the company has to have to shut down and to sell their assets. So things can happen really, really quickly. It's not a matter of, you're not going to be hacked or are you going to be hacked? You are going to be hacked, but how are you going to come out at the other end? And if you prepare well, if you have a crisis committee, for example, that has a plan, a cybersecurity plan, and that plan is being rehearsed at least once or twice a year, then you can expect to get out of a situation like that in a better shape.
Okay, perfect. And is any authority recommending to treat cyber risk differently?
Very many authorities are actually talking about treating cyber risk similarly. I saw cyber risk, knowing the examples from the industry, and how quickly things can happen. I saw cyber risk as something special. I was reading recently a report on the SMEs that were hacked in the UK, and I think they were saying that most of the hacks, 80% of the hacks, happen in 60 seconds or less. Mm-hmm. So whether that is ransomware attack or Locky or anything. So because of that, that supports the case of treating it differently. And I was actually very happy to see that somebody else is actually saying the same thing, and that is IOSCO. So it's the International Organization for Securities Commissions, which has about 140 members. The only Australian member is ASIC, so that's our regulator. And they recommend that you have to pull the cyber risk out and treat it differently.
Okay, yeah. I mean, what's your experience, if we think around cybersecurity and versus an enterprise risk system, what have you seen from clients that you've worked with and organizations you've worked with?
I feel that with cyber risk management and also in relation to cyber risk transfer, where insurance plays a part, businesses are still grappling with the cyber risk issues to then have robust mechanisms for risk transfer. Because I would like to see businesses have risk registers which articulate various cyber risk scenarios, and then as a broker for me to then show evidence of insurance policies responding to those cyber risk scenarios for me to prove that the policy provides adequate coverage. But I find that executives are still sort of grappling in developing those robust risk registers which place cyber risk either as part of operational risk or reputational risk, but also for myself as a broker to have those risk scenarios that I can match policy wordings with. So I think there's still some level of immaturity there.
Yeah. And is there any kind of recommendations that you could get, or you could kind of provide to anyone who's currently listening? Your one or two top recommendations for kind of moving their risk, I guess, the way they think about risk from immature to a more mature approach? Is that through education or?
No, that's a very good question, actually, Natalie, and especially since Diligent has that interface with boards, and you provide your system and your services to many ASX listed boards. The question that really is facing us is that what is the role of boards in dealing with cyber risk? And I think a top-down approach or a governance approach, it stems from the board and permeates down the organization, really would be the best approach, because then we would take off fiduciary responsibility, and boards would then also take off their own responsibility to the shareholders. But then the executive would have a specific mandate around governance and compliance. And then we would see more sort of oversight flowing downwards and more information flowing upwards. And I think the boards and the executives would work more in sort of like, connected manner then.
Yeah.
And I think especially because our forum here also caters to a number of boards, I think you've hit the right spot in asking that question as well. And I think that is a key question.
Okay.
And I think I would like to add something to this. So one of the key questions that you need to ask yourself if you sit on a board, where does your most sensitive data reside?
Yeah.
And that is something that, directors have to know. But start from the board pack. Just imagine that, the board pack is a story about the most confidential things in the company and the most confidential issues, challenges, all the figures, where you're going, and you would not want that to actually fall into the hands of a hacker and end up, either on the dark market or, on the first page of the newspaper. So if you start with this in mind, thinking of how sensitive that data is, then I think Diligent offers a very good solution to say, well, we actually can protect that data. We can protect the board packs.
Yeah.
And everything is encrypted and that would not leak.
Yeah, absolutely. Absolutely right. Well, I think, on that, we'll just move on to the next area that we're going to discuss today. And this is really, we kind of set the scene around risk management and where to sit within the enterprise risk system. So I think now, what we really want to do is start talking about how do we combine the risk management with cyber insurance. And obviously, Mina being a cyber insurance expert here, it would be really great to hear from you first of all. We're going to talk about the first and third party risks first of all. So I don't know if Mina or Monica wants to kick off on that.
I think one of the things that where Mina and I, discussed before was how to actually write a meaningful cyber policy. I think the first time that I met Mina, I actually asked her, I said, look, I know many clients that completely, they chose to manage their own risk rather than get a policy that won't serve them. So I liked how Mina was very transparent and clear about what a policy will cover and in what conditions. So if we think, for example, when you go to get a cyber policy, you'll have a number of questions. And I'm actually reading now from a real policy. How many individual clients or customers or employees records are you holding? So as you know, if you're in the healthcare sector or if you have more than $3 million in revenue per year, you'll be subject to the Privacy Act and mandatory data breach notification as of 23rd of February next year. Another question, if credit card details are stored, are you PCI DSS compliant? Then it goes on to ask about the network security. Do you have a virus protection in place? Do you have a firewall with an intrusion detection system in place? Do you enforce software updates processes, including software patches and antivirus definition updates? Remember that WannaCry hit the PCs, so it was done, that attack was done by scanning the internet for computers that were not patched and up to date, or they were running unsupported operating systems. Another question from this list is, do you have a regular online and offline backup? Do you have a written business continuity plan for a network outage? And it goes on and on and on. Now, my question to Mina was, Mina, what if I say no to these things? What if I don't have a firewall, but I'm paying you the money for this policy insurance? Are you going to cover me?
Really, and my answer then was that, the question then comes up is that if a business does not have adequate cybersecurity and governance measures and policies in place, then at the time when they make a claim, despite the fact that they've got a policy in place already, the claim that they make on the policy may get rejected on grounds of negligence, that a business did not do enough to prevent that cyber incident from happening. And if a client came to me and they said no to a few of these questions in the questionnaire, I'd actually advise them to get their risk management practices in place, because being a broker, I don't think I'll be in a position to advise them to get an insurance policy when they haven't ticked off, the basic risk management and governance sort of questions on the form. And then, the premiums can be very, very high if a business does not have adequate security. And even then, the possibility of the claim getting accepted is low, because the underwriter can always turn back and say the incident was purely because of negligence and was not an incidental event.
Mm-hmm. And I think, if I can use this, I think a U.S. senator at the inquiry about the recent Equifax breach, he actually said that, we can't put in place a law for stupid. And I think that the example with WannaCry, where, the insurance policies have not paid for negligence, it's, in the same category. Mm-hmm. So if you prove to an insurer or to a broker that you mitigated risks, you have the governance structure in place, you've got a risk management system, you've got a business continuity plan, you've got a data breach notification plan, you've got all the technical aspects covered, then I think you have a very good chance to be covered by the policy insurance, because they will send their forensics teams and they will analyze what happened and they will see. Obviously, there's a new virus that was not picked up by our antivirus software or something. They will have to pay in that scenario, because you did everything you could. However, the nature of the cyber attacks is such that everything, it constantly changes and there are new things. So I think that the cyber insurance should actually be seen very much a component of the entire cyber governance in the organization. Mm-hmm. So it can't fix. It's not a panacea, for cyber attacks.
But yes, I agree. And having said that, what the insurance actually covers is a number of first-party and third-party risks. And once a governance framework is established, a business must then understand what these first-party and third-party risks constitute. So the first-party risks are really the risks that are faced by the business themselves. So the loss or the expenses that a business may incur after a cyber incident, and that can be business interruption. Then that can be the cost of restoring systems and data, and that can be the cost of hiring extra staff and loss of profit. So all these losses and expenses are those that affect the business that's insured themselves. And this is usually called indemnity coverage. So indemnity is usually the cost incurred by a business to bring its operations up to the level where it existed prior to the cyber incident. So in case like, indemnity in the larger context also means that a factory stops functioning and they have the operations are shut down until a time, everything is restored and the business is up and running. So all the loss until that moment is calculated and paid off as first party loss. Third party is then when a business is contractually responsible to a third party, and in context of cyber risk, that usually is the privacy of data. So, if customers are letting a business store personal data and are willing to share their personal data with the business, then the business has an obligation to the third party for that data, and it's usually a liability risk because the contractual relationship is established based on the legislation, which in Australia is the Privacy Act. So third-party risk or third-party liability can constitute any regulatory fines or regulatory response expense or litigation that stems out of the data breach, and any legal payouts or penalties, and also any class action suits and the defense cost related to any litigation that follows as part of class action or directly by the third party themselves. So it's usually actually in context of data privacy liability. And if we look through the Privacy Act, then it is very prescriptive in sense of letting a business know what their duties are in terms of collecting, storing, archiving, and using the data they hold. And any breach of any of those clauses can constitute third-party liability, and any expenses and losses in relation to that is covered by the third-party coverage in the insurance policy.
Right. And so how can organizations prepare for this better? I mean, we've got like some questions here, and I think you've mentioned a few things that you discussed just there a minute. Monica, is there anything that you would add to that in terms of preparations that organizations can do a little bit better?
Yeah, I think, you know, I discussed with Mina at one point what are the third parties, and one of them is the regulator. Another third party are the banks, but a very significant third party are your vendors. And more I actually hear about the fourth party, which are the vendors of your vendors. So now large corporations, which are like very risk sensitive, are going to interrogate the fourth parties, in other words, the vendors of the vendors. So you have to think, do you have in your existing contract, do you have any clause that deals with the breach that occurs through your vendor? So if you don't, you need to think of, you know, sitting down with the vendor, raising a contract variation. At least you want to know what they will do and how they are going to help you and support you. The questions that we provided here are probably more for a new vendor. So when you want to look at a range of vendors and you put, you know, an RFP together, and you want to request for proposal, and you want to choose between vendors, then definitely you should ask these sort of questions. Where do they store the data? If they say it's in the cloud, it's not enough. It doesn't necessarily mean that it is well protected. They have to have an additional layer of security. And you need to understand if your data was segregated from other customers' data. You need to understand what sort of HR measures and clearances, security clearances they have for their own staff. And also ask them what kind of cybersecurity insurance they have. Plus, ask, you know, the last question is, who are their vendors, and what do they have in place with their vendors? Because I think that we all generally need to be protected. I don't believe that there is sufficient money in this pool of all the reinsurers to cover, you know, if there is like a major security event.
Yes, and especially with supply chains now becoming digital, it's really hard to sometimes determine who owns the risk and liability in the supply chain. So contracts, sometimes contractual liabilities may be excluded as part of the coverage for cyber insurance. And if a lot of data sharing is happening across the digital supply chain, then the contracts must spell out who owns the risk and liability in the transactions that occur in the supply chain.
Yeah, that's a really good point. As they move more digitally, it gets even more complex than the risks involved. So I think we'll just jump in now. I mean, I might go to you to talk through one of these case studies.
Yes, Natalie. So that is actually laying bare the fact that there is a lot of misconception about cyber insurance in the market, and a number of myths continue to circulate. But I think that is part of the growing or evolving maturity of the product and the market, because we have to recognize that cyber insurance is the first insurance that is responding to the digital world that businesses are operating in with digital models. So, a lot of litigation has occurred in the recent past where the insured has taken on the insurance company, and because the insurance company has refused to pay out when the claim has been made on the cyber insurance policy. So Sony had this well-publicized dispute with Zurich in relation to the PlayStation data breach. And really the contention here was that Sony did not have adequate cyber insurance coverage, and they tried to make the claim on their comprehensive general liability policy, saying that it must pay out for the cyber breach. However, in that context, really what we have learned from the past is that a lot of data got published on Sony's website, and that was a data breach and a breach of privacy. But general liability policy would pay for something like that happening when a business has by mistake or accidentally revealed information about clients that either impacts on their privacy or causes defamation for a third party, which is more like an advertising injury. So Zurich argued that really in this case, the publication of personal data on the website was more because of a malicious attempt by a third party and not, like an unintentional act by the business themselves. So because the third party had deliberately posted that information on the net, it was an advertising injury. It was actually a malicious hacking attempt. So had they got cyber insurance, the media liability and third party liability coverage would have easily responded and helped Sony make the payout and handle all the class actions. But there was actually a ruling against Sony that the comprehensive general liability policy was in fact not the cyber policy, and they did not have adequate coverage in that instance for that data breach instance. So the lesson learned is that a business must look at the current policies and look at gaps in those policies and whether or not they respond, whether that policy responds to all potential cyber scenarios. And they don't try to stretch the existing policies to cover cyber scenarios because the existing policy may not be designed to do so in the first instance. Absolutely.
I have a question because I'm always interested in D&O insurance, in directors and officers insurance. And I was reading that in the US, you really have to go through a very thorough questionnaire and, to check some points so that you don't fall in between the cracks between cyber insurance and D&O insurance. So how do you make sure as a director on a board here that you don't have these sort of issues? So do you make sure that those two policies are actually covering everything, or how do you deal with that?
Okay, so that's a very good question. I'll then have to actually explain a little bit about D&O coverage. Now, D&O coverage is really meant to protect directors for their personal liability, but also enables a business to indemnify directors for a number of events. But for any part that the business does not indemnify its directors, the insurance picks up that coverage. So the directors and officers of a company are guaranteed full coverage through D&O policies, one through the parts that the business picks up and indemnifies the directors, and for those exposures that the business does not indemnify the directors, the policy provides them with direct coverage as well. Now, when a cyber instance or event happens, there's obviously the fiduciary responsibility that kicks in because the event can impact the share price and can lead to reputational loss, and shareholders can then start with a class action suit blaming the board for not ensuring through their governance oversight proper measures to prevent that cyber incident. So when the class action ensues, the cyber policy responds more for picking up any class action and responding through the defense cost and the legal payouts. But if there are directors who are personally then held responsible for that cyber incident and their personal liability is invoked, and the business then wants to distance itself from the directors for that event, then there is no exclusion in D&O policies as such to say that we'll cover you for all other incidents, but not cyber. So D&O policies do not have any exclusions for cyber events.
Well, so far. So in other words, the lesson for me is that as a director, I need to really look, go with a fine comb through all the conditions of the D&O insurance to make sure that cyber is not excluded.
That's right, but you also must make sure that you have a cyber policy. So D&O policies, in conjunction with cyber policies, can provide you very, very good coverage across the potential exposures.
Thank you.
Okay, thank you. Let's jump into the next one, Meena, that you were going to talk through.
Well, this is another instance where, the comprehensive general liability policy did not trigger when P.F. Chang actually demanded that travelers insurance pick up their claim for the Dara Beach incident that happened, and a lot of credit card information was stolen. And travelers insurance said that there was actually, that self-insurance or co-insurance part of, or the deductible part of the insurance policy, which was like a retention, and P.F. Chang had to pay that out first. But also the fact that the general liability policy did not cover for that instance because it was it did not have coverage for Dara breach. However, P.F. Chang also had coverage through Chubb for cyber liability, and they did get a payout of 1.7 million from Chubb for that instance. When their bank, which was their transaction or credit card processing partner, did some PCI kind of assessments after the breach, they charged P.F. Chang for those assessments because they wanted to ensure that P.F. Chang was PCI compliant for the future, and gave them reports of the assessments. P.F. Chang also tried to get through Chubb the payout for that assessment. So Chubb came back and said it was actually federal insurance, which is part of Chubb, and Chubb said that they were not going to make payouts for the PCI assessments because that was a contractual sort of obligation that they had to the bank, which was their merchant was the sort of the merchant sort of facility provided. And the third party, which was the bank, I think it was Bank of America, had really not suffered a data breach. So there wasn't a contractual obligation implying for the data breach that happened, but it was actually a different kind of contractual obligation applying, which was the obligation the client had towards a third party for updating its processes and systems, which was around PCI compliance. Had Bank of America had a breach owing to P.F. Chang, Chubb would have responded to the third party contractual obligation for protection of third-party data. But there was nothing like that. So the $1.9 million that was spent in PCI assessments was actually not paid out. So there was another sort of pushback that P.F. Chang had through Chubb, as well as part of the general liability policy through travelers insurance.
Wow, fascinating.
So Meena, sorry. Can I ask you a question, because it's sort of I'm actually thinking that, if I sit on a board and we buy this sort of cyber insurance and we buy the D&O insurance, and then we have such a scenario where then, the broker comes and says, got you are not covered for this one. So what's the best approach? Should we sit down beforehand with the broker and say, well, let's cover the list of scenarios where you're going to cover me, or let's cover the list of scenarios where you won't cover me? So there's not, how can I say, the cyber insurance is not a new product. It's not an old product. It's a fairly new product, and you don't have that many cases to look at. What do you suggest that we should do as directors sitting on a board to ensure that we do buy a cyber insurance, a cyber policy that is going to be meaningful.
Well, I think you, in a sense, you have answered the question when you say that whether you should give me those scenarios and I should, as a broker, actually respond to those scenarios by saying that this policy would cover these scenarios, but not these scenarios because exclusions would apply. So really, a broker facilitates this process by facilitates the process of risk transfer by matching policy wordings with specific scenarios. And really, we do request that businesses, as part of the internal risk management, actually articulate and define their own risk scenarios and demand from the broker policy coverage for those scenarios. Because just buying a cyber insurance policy or a D&O policy, just because everyone has one, is not the best approach. Every business is different, and you, as a business, you must define your own risk scenarios as part of the risk register and demand risk transfer strategies and ensure or risk mitigation or risk elimination strategies. And if you're seeking insurance as part of your risk transfer strategy, that you actually see evidence of policy coverage to specific plain English policy wording.
But Meena, if I go tomorrow to a cyber insurance broker, and let's say I'm on the board of a medium-sized company, and I say, look, I would like to, I'm showing you my risk management system and so on, and I would like you to cover me for these risks. Quite often, and I don't want to pay a lot of money, quite often the cyber brokers are saying, well, this is our policy, it's a bit like take it or leave it. So how can we actually, how difficult is it to change, to modify a cyber policy to really suit my needs?
That's actually the next part of the approach, where when you have defined your risk scenarios and the broker matches the policy wordings, and you find that for a number of risk scenarios, the policy either has exclusions or has optional extensions. So something like this, where you look at the policy wordings, you look at deductibles and exclusions and optional extensions, and that's when the broker would say that, look, you need an optional extension for this policy, this scenario, but this is an exclusion, and you say that, okay, as a business, we don't want this to be an exclusion. We want coverage for this part as well. Then it's up to the broker to approach the insurance company, or even seek another provider who can, through the cyber policy or any other policy, combine their insurance wordings with the cyber insurance to provide you with comprehensive coverage. So it's the whole exercise, the whole approach which lends itself to discussion around gaps and overlaps and limits and exclusions to reach a solution where the broker has been able to provide you with comprehensive coverage. You're satisfied that all your risk scenarios are covered, and you have your policies are working for you in the right way, and there aren't any gaps or exposures that you haven't got coverage for or are left undiscussed.
Right. So we all have to be careful with the gaps and the wording and the exclusions.
Absolutely.
And in other words, we have to go in this relationship with the broker with our eyes wide open.
And of course, the broker is there to, sorry to interrupt, and the broker is there to help you. So an expert cyber insurance broker can even highlight for you potential scenarios. This can enable you to have a more, a more detailed discussion where, as a business, if you have articulated all your risk scenarios, the broker may be able to highlight some gaps in those risk scenarios, and also point to the top 5 cyber risk scenarios, and even educate you about the policy wordings and how they're worded and what they respond to. So I'd say that the risk, you surely have to go into that discussion with your eyes open, but it's also a good idea to work with a specialist.
Yeah, rather than go to any broker in the market and ask for cyber insurance. So if I actually ask you an extreme question now, because this is one of the things that I actually applied to one of the farms committees which I chair. I invited the auditor of the company to come to some of the meetings of the committee, because I wanted him to really understand where we are coming from, why we make certain decisions and so on, and why we present the accounts in a certain way. So what would you say if, for example, a client would invite you to come to this farms committee to actually sit in a couple of the meetings so that you understand the nature of the business, and then you can actually apply a policy that would help them? How would you feel about that? Is that something that you are allowed as a broker, or is it in your remit?
I would say that I would like to structure the discussion slightly differently. I would say that first of all, a business must be clear about what they want, and they should approach a broker who would then say, let's start with you're filling out an application form, and also understanding as an advisor what you're looking for. But so, I think a broker really, in terms of talking about remit and all, really has the obligations to stick to a process as well. A broker would come in and stick to a process. Most brokers will ask you to fill out an application form. Most brokers will get you a quote based on that application form and invoice you, and you pay for the insurance. But with cyber risk being slightly risky, I think the role of the broker has become a bit more involved. But you must be mindful that the broker still follows the remit and follows the process.
Right. Okay. So if the broker says, "I'm sorry, I can't come to these meetings, but I'm going to follow the process," we will respect that because that is in your specified approach.
Yes, but the broker must come to your meetings. But I think it should be structured where there are outcomes defined for each meeting as well.
Oh, okay. Thank you.
Perfect. Okay. Well, that's been great. Like, we're coming towards the end of our webinar. We only have a few minutes left, so I don't think we're going to have time to go to questions today. So we will address those afterwards. But I would just like to finish up by saying, that was fascinating. I think we've obviously seen that there's so many risks nowadays. Cyber risks, obviously, becoming one of the most prominent risks in organizations today. So I want to thank Mina and Monica for your time and expertise during the webinar. And we will be in contact with a link to the recording. You'll get that within the next 24 hours. So would Mina or Monica like to make any final remarks before we sign off?
Yeah, thank you. Thank you for inviting me. I guess I actually learned, since I started to work with Mina, I learned quite a lot about how to approach. I must say that I was slightly reluctant towards, getting cyber insurance that would not meet the requirements of a company. I realized that there is an opportunity for dialogue, and in any case, the cyber insurance and the risk management are just, two halves of the same whole approach that a board needs to take to manage its risk.
Absolutely. I'd like to say the same. Thank you, Natalie, and thanks, Diligent, for the opportunity. And having also worked with Monica, I can say that there is definitely that opportunity for a dialogue, and businesses must embrace that opportunity, because it's going to be getting more risky as we sort of go towards the next year. But also because if you're not on the learning curve in terms of managing your cyber risk, that's when things are getting more risky. But if you're on a learning curve and you're learning and responding and imbibing new strategies to deal with this risk, you are actually, as a business, doing really well. So the opportunity for a dialogue must be embraced at this stage.
Fantastic. Well, thank you very much. And on behalf of Diligent, we'll thank Monica and Mina once more. Good afternoon, everyone. Thank you. Goodbye.